Hello, everybody, and welcome to the first ever market report featuring Sean Provencher and Jane Johnson together.
We're with the Briar Hill Group, and truly, this is our first market report. So bear with us. It may not be perfect, but we're going to do our best for you today. So, Sean, what do you think the market is going to be like? What's your
I
prediction?
I think our market is showing early signs of a shift. That's my opinion. I think things are softening. The stats aren't showing it yet because the stats are all showing what happened last month. But in real estate, you need to remember it's kind of like you're driving down the highway and trying to steer by looking in the rear view. And the
Mm.
pulse of what's happening boots to the ground right now is not what the stats make it out to be.
Okay, that's a great point. I agree with you. I think we are going to see definitely a shift in the market. I'm seeing some signs that I think will definitely affect what's happening with real estate. For me, the biggest sign is that our inventory is increasing. We're the highest I've seen in a very long time. So that's one key. And the other is I'm seeing a big increase in the number of price decreases. In fact, over the last week, let me just pull my stat up here. We've had 187 price decreases, and compared to pending, we've had 153. So that's the first time I've seen that in a long time. What about you?
I think there's that. For me, the amount of standing inventory is really the smoking gun. Like when you look at it, it paints a picture that it's okay. But coming into the spring, we all thought that this was going to be like our recovery. Like we were expecting prices to start getting back to normal. But if you look at the amount of standing inventory that we've been carrying every month this year and compare it with last year, not in just the number, but in the absorption rate or like how many months of inventory it reflects, that number is bigger than it was last year. And the problem is like we are so close to the point that we would be technically in a buyer's market. Like we just don't have a lot of margin.
Right. So our absorption rate is about 5 months right now. So what does that mean? It means if you have a listing right now, you have a 20% chance of selling it in the next 5 months.
Yeah, yeah. Basically, it means if we stop putting homes on the market and just sold out the inventory that we currently have, it would take 5 months for us to sell through all of it. And if we get to the 6 month mark, that's where we'll really start to feel the temperature change in negotiations between who holds favor, and it'll move clearly to the buyer's side.
Right. So just to be clear that this is for the market as a whole. So depending on your area and depending on your list price, we've recently done a price correction on a condo in Fairfield. We looked at what was happening in the market right now. So we looked at current and pending. We made a shift in the pricing. We changed our strategy and we got an offer very close to asking. So the sellers were strategic in how they were pricing. What do you think of that strategy?
I think pricing is key. Like the more the market is in the seller's favor, the more of a margin you have to price inaccurately. In a market where it's more growing towards the buyer's favor, you really got to have your pencil sharp. And the idea of throwing a couple extra $1,000 on your asking price to leave room to negotiate, that kills people because you won't get any offers at all. There's one thing that I'd add too. You said list price and location. The other one is asset class. So like certain parts of our market are moving a lot more readily. Like if you're in a starter price range, say 900 to 1.1 detach in the core, you know what, you've got a little bit more forgiveness from the market. If you're a condo, it's going to be a little bit slower. Some West Shore property types are a little bit slower as well. So it really depends on what you have to sell.
To me, the market, when it's shifting, it shifts two ways. So, first of all, we have our core, which is downtown Victoria and the big five, let's call it. So, Saanich, East, West, Victoria, Vic West, and Esquimalt. And I just came up with that term. Do you like that? The big five?
Oh yeah, yeah. Stamp it.
Anyway, the market's going to be the hottest there, and then it's going to cool down as it goes out geographically, but it's also going to cool down from price from the top down. So it's really important to get ahead of that market. And we were talking price the other day. I'm trying to remember what exactly we were talking about, but essentially, if the market is going to go down, if you price here and the market is here, people are going to say, you know what, that is too good a price not to write an offer on, and you can still get over asking, right?
Not only that, but okay, right now prices are essentially flat, right? Like, they're bouncing around the zero mark year over year pricing. But if you look at a market which is starting to show signs that it could potentially go down a little bit, if it does that, you're better off to price a little bit ahead of the market right now and get an offer as opposed to pricing at somewhere that feels good for you but might be a little rich for what buyers feel is appropriate. And then, you might see your property sit on the market for 3-4 months. You expose yourself to a lot of risk. If you do that and the market does go down, you tried for an extra 5 grand right now. Well, 3-4 months from now, you can end up selling for 25-30 grand less if the market goes that way. So being a little bit generous in what you price your home for could actually net you more in the long run.
Generous meaning
Meaning
just
low. Yeah, like
lower.
you're putting an attractive, a competitive price out for buyers.
So I just want to touch on quickly, actually, I do have the stats in front of me. So for single family homes, we are actually a little, let me just get it. We're a little down. So we had a bit of a surge in April of 2025. We were at 1.4, and it is showing now for last month 1.3. So that is a drop, but we're back to where we were sort of in the spring of this market. We had just a little surge and we're back down. Condos, we've come back down again. So we peaked this year in February at 650, and now we're around 600 for the last 2 months. And then townhouses are doing pretty well. They're around the 850 mark. Now, we have sold as a team townhouses at 1.8. So remember, we are just looking at average price here, and it's really dependent on what's happening in your neighborhood, right? When you say in the product.
Absolutely. The other thing that a lot of people don't spend a lot of time thinking and talking about is in a market like this, the other thing that's really important is presentation. So you can price accurately, but if you cook fish curry right before someone arrives for their showing, or there's socks on the floor, or just general dusty, grimy dirtiness, or it just doesn't show well because the furniture hasn't been staged right. Like little things like that can be the difference between you getting an offer or having people walk in and just feel turned off. Because remember, the main thing that's going to be changing the atmosphere is going to be that balance of supply and demand. And for a buyer, they have the luxury of choice. So you really need to make sure that, like, that's such a cheap thing to fix if you're planning on selling your home, is just take a little bit of extra time and get it right before you put it on the market.
And so this also speaks to staging. So when we work with our clients, we do stage their homes. We have a consultant who goes in who helps you get your place ready. And where you're going to get the biggest bang for your buck is on paint, for sure, and just making sure you have a theme throughout your house. But also, we do a really professional video. We don't just talk about the house itself, and we do walk you through the house, which is really important. Some videos I've seen of real estate, they introduce a property and then you zip through the house. You don't know the configuration. But the other thing that we do is we talk about the community, because you're not just buying into a house, you're buying into a community. So we want to make sure that you are in a place that you're going to fit in for a long time and you're happy, because a happy seller is a seller who refers more clients.
So I think this is a really good point, because another thing that a lot of people might neglect when they're looking at their options, like different realtors are going to have different packages that they'll offer in terms of how they're going to market a property. And different buyers gravitate towards different ways of analyzing a property. For example, I've got a client right now, they are floor plan people. They'll check the square footage. There's a couple things they'll tick off. They don't go to the photos, they go to the floor plan. I'll walk into a property with them and they'll say, oh yeah, up ahead on your left is the laundry room. I'm like, what? My wife, she watches the videos. Me personally, I go on MLS, I look at the top stats, like the most important square footage, bedrooms, washrooms, whatever it is that I'm measuring it against, and then I go through the photos like at this speed, because I can tell you in 10 seconds if they've done the renos, if it's been updated, if it's likely to smell. Like I've walked through enough that that's what I need. But if you have your property listed and you don't have a full suite of media and collateral, you might miss that one buyer who your property was perfect for, but you got eliminated just out the gate because you didn't come equipped.
It's very interesting you say that because I look at the map first. I try and figure out
Oh,
where the house is in relation to major roads, and I also look at what the community is and where the amenities are. So that's key for me. Then I go and I look top down, and I do exactly the same thing with the photos. I'm like,
yep.
because I can see, we see themes, and this speaks to really the finishing of the house, what the quality of the finishing is, and it shows up. We know what to look for in the photos that maybe a buyer doesn't know. So, for instance, I may see shadows on the wall, and I'm like, oh, you know what? There may be a bit of mold in that house based on maybe it's an outside wall and the bed's close to it and the wall's cold, and so you get a lot of sweating from the bed, or different factors, things that we see. I think experience plays a big factor in how we can help people as buyers and also sellers getting your place ready, just seeing what are going to be the top things that are going to show up in a home inspection that may deter buyers or that we can fix perhaps before you go to market. So speaking about overall presentation.
So where do you think it's going?
So with a shift, so my thought is the market can change on a dime. It really depends on interest rates. I think one of the things that's been helping us is we've had 7 interest rate decreases since last year, which we need. Is it 7?
I think you're right, but I could be wrong.
Okay. Well, so one of the factors that affects the market is interest rate decreases because it promotes optimism for buyers and they get interested in looking again because all of a sudden housing becomes more affordable. The other thing is just like a variety of price ranges. I think we're seeing more lower end homes on the market. So there are people who are getting into the market, a single family home at a lower price than I've seen in recent years, like especially since COVID. I think we're down about $200,000, but the range is bigger. So the quality from at the lower level compared to the upper level ranges a lot. So I think we're seeing on average, up to 1.4, we have a $700,000 range for single family homes for the kind of average buyer. So I think there's choice. I think there's still going to be activity. People still need to move. But I'm seeing that with the increase in price, we're going to see that range maybe increase a little bit more. There's going to be, if your house isn't presenting well, if you're not priced right, you're going to stay on the market. That's what I'm thinking. And there are going to be some homes on the market that are going to sell quickly because they're priced right, they show well, and they're negotiated and marketed well.
I couldn't agree more. I think it's going to be the tale of two markets. There's going to be homes that sit on the market because of any number of one of the things that we mentioned. It could be presentation, it could be marketing, it could be pricing that they started too high and then they just couldn't get ahead of the curve because they'd already lost their momentum by the time that they got where they needed to be. And I think it's interesting. I think we'll continue to see homes sell for what really they should sell for, at least in the short term. And then I think it's the properties that missed something that are going to lament on the market for a while, and then they might fall prey to low offers. And that, unfortunately, is what might drive prices as an average down. It'll be interesting to see if, on a whole, all properties start to move. One thing I'll say is, like, we kind of pretended our little island was not part of the rest of the world for a few months, but Toronto, Calgary, and Vancouver absolutely got hit way faster and way harder than us. We are more of like a lifestyle market. Like, people come here because they want to live a better life. It's not economically or politically driven. But at the same time, when you look at the bigger trends of what's going on across the country, it's hard to imagine that we'd be immune to that. And it's very, very tough in other cities of similar price points in Canada right now.
Well, I have friends who are in markets all across Canada, and it's been interesting to hear their stories. And I do think we are a secondary market, so we do slow down after they do elsewhere, and we've been listening to that else, like exactly what you're saying in Toronto and Vancouver for sure. Calgary is doing well. Edmonton is kind of, I'm told, is pretty flat. So they don't have a lot of variation because they're a government town and they're stable. But I guess, okay, so I just want to say, What are three factors to know if you're overpriced? One is you're not getting any viewings.
Yep.
Two is when you get feedback, they're actually not talking about price. They're just, you may actually get no feedback because they're just going to wait for you to drop the price. And three, maybe nobody's showing up at your open houses.
I'll add a fourth one. Offers are the only true form of feedback in my books. If we're not getting offers, right, like clearly something's wrong. So if you have your property on the market for, if this is a typical property and you're in a typical price range, you should be seeing offers in 2 to 3 weeks max. And otherwise, that's a smoking gun. You're priced outside of what the market's offering, because there are offers on properties every week. So if you take 2 or 3 and you don't get an offer, well, that's 2 or 3 weeks that other properties were taking the offers that were meant for you. And those first 3 weeks on the market are going to be your highest level of activity. So you should definitely be seeing offers before then.
Yeah. Yeah.
Okay, Jane. Right now, I think it's a great market for first-time buyers. What
Right.
other groups do you think we should talk about? Because like we always talk about buy low, sell high, and then when the market softens a little bit, people run for the hills. This is the time to get in. Like this is a great time to get into the market. If you haven't found something yet, you've got time, you've got options. There's tons
Choice.
of inventory to choose from. You can negotiate favorable terms. You might even be able to get a bit of a deal if you're open to choosing the ugly duckling, like we were saying earlier. Those can be a great buy. Who else should look at this market?
So first of all, we can determine if the ugly duckling is actually, you know, ugly on the inside as well as the outside, because sometimes they don't present well and we can see through all the grossness. But the other, I think it's a really great time if you want to upsize, if you want to move across the market and up, because you're going to be in a market at the lower end where you're going to sell faster and the upper end is coming down. So I think it's a great time if you want to move just kind of laterally and up a bit. And for those who are wanting to downsize, I also think it's a good time. I would sell first and then buy, because then you know your budget. And if you sell first, you're going to get ahead of the market. As the market goes prices down, you're going to have more choice.
I'll just to share an anecdote, because I know a lot of people are going, oh sure, the realtors are saying it's a good time to buy, to upgrade, and to downsize. Like, you know, how could that be possible? You're saying two different directions. But if you think about what we were saying a minute ago, where there's like a wider range for any given property type, if you're downsizing, that can mean opportunity. You can still get, right now, you can still get a good price for your larger home that you're selling. And if you shop the market, you can find some things that are selling for less previously than they would. So where maybe originally you were thinking that you'd have to move into a townhome or a condo, maybe you can get a cute little detached that's sold at a great sticker price, just because there's a wider range of flexibility in the market.
Also, we're seeing more inventory in the condo market right now than I have in a long time. Part of that is due to people getting rid of investment properties and changes in legislation at the provincial level, which I think created these side effects over time. But also, with the change in rental rules, there are more people who are getting out of renting condos. So there's a glut, and there's a lot of condos that are coming on the market as new builds downtown and in the West Shore. So you want to kind of get ahead of that before, if you're wanting to sell, you want to get ahead of that. But if you're moving into the condo market, what it means is you have a ton of choice available and great product out there. There's some really nice condos out there.
Yeah, I couldn't agree more. Anything
All
else?
right. Well, I just want to say, if you want to know what's going on in your neighborhood, connect with us, because I think it's very specific. We can really dial it into where you are in your house, where your house fits in your neighborhood in terms of price, and we can come up with a marketing plan to help you sell quickly and fast.
I really agree with that. Like we were talking earlier about how different asset classes are going to have a different response to a changing landscape. And it really depends on what specific neighborhood you're in. And remember, especially if there's two sides to your transaction, if you're selling and buying, we can work out a strategy where you're taking advantage of the fact that there's some insecurity in the market right now, and you can come out really strong on both sides just by being savvy to like seasonality and things like that. So It's a case by case basis, but we're watching it closely.
So how do people reach you, Sean?
You know what? Send me a text. 250-589-4166. I'm old school. I'll get back to you quick that way.
And text is good for me too. My number is 250-744-0775.
Not bad for a first try, Jane. Not bad.
All right. Well, we'll see you next month, everybody. Thanks for dropping in. And if you have any questions, give us a text or give us a call.